Okay, guys, the DAX has presented itself with another opportunity. Now, this one is a different type of trade because it's actually now reverted into a fib tracement. Now, it's moved up 273 pips in a very short period of time. Now, it's in the danger zone, but what it creates is this danger zone inside a danger zone. So you can see it started down there where it targeted to get out last time. Pull that up. Well, what we have now is a new 23, so it's a zone inside a zone, which is there, here, okay? So there's that zone. Duplicate that, put it down to here. Okay, what I'm looking for, we do have a key level through the middle, but I'll look to enter on the 23 and I'll be out by the 38. So again, all I need to do is just set a simple trade in motion, just roughly at the base of that candle. Drop that to there, in and around this area, because it's already tested it on the 5-minute. Now, if I put this on a 15-minute, which is roughly where I'll be taking the signal from, as you can see, the move is pretty much identical. So I'm quite happy. So I'll just leave it on a 5-minute for now. So I'll just pull this through, let that trigger into that, and then come back and look to be gone. Well, it's actually 37 pips again. So it's gone to target now, or gone to entry now rather. So that can now push through onto here. Now, it could even have a good go into here. All right. Now, what you got to remember with a trade like this is anything that moves with high acceleration will come back on itself. And the reason being is you can hear people sort of say, oh, there's an imbalance in the market, all this sort of thing. Not quite right. There's never an imbalance in the market, because the story of there's only buyers or sellers can't happen, because it's a zero-sum game. In order to buy something, someone has to sell it, and in order to sell something, somebody needs to buy it. So there needs to be two parties, which is why it's zero-sum. What it's actually showing is there's an accelerated interest in buyers at this moment in time. Now, as that accelerates up, you're going to have short-term traders taking out their profits. You're also going to have opposing positions with their stops getting hit, which will accelerate the market again. Then at the top of the market, you're going to have opposing positions, etc., etc. And you put all of this into a mix, and what happens is the frenzy of buying runs out. Then when the stops and opposing positions and profit taking all come into play, it creates a retracement. Now that retracement, if you follow the rules of the way Fibonacci works, and it does follow it quite a lot, will always stall the 23, 38, 50, 61, 76 and back to 100. Now if it's a retracement, it'll naturally try and get to the 38. Get it to the 38, pull your stop into break even, or take your money. If you're going to pull it to break even and take a partial, fine, and then hold it onto your 50. Now the safe bet is there. So that's my trade. Now what it can also do for you, we're going to remove that, is it can give you areas of attraction that you can fully map out. Now from here to here, I can stage up into this zone. And if it breaks out to the top, well, then this might be actually continuing to move higher. Therefore, the move is not over and it's not quite ready for retracement. So that's what we'll do. We'll measure this out and we'll try and get it back to 38. Okay, so let's play this one out. Okay guys, so that's done. Same drill as always. Make certain I've got my tickets out. So delete the ticket off. And there you go. So got 2 positions into it. Paid me quite well. Following the rules. And look where it's stopped. Bang on that 38. Right? Came down, tested the 38 and is then pushing back up. These are not coincidence. I see it every day in the charts and I follow it through every day. Trading is not difficult, guys. It really isn't. If you know what you're looking for each time, it's easy. And what I'm looking for is higher time frames to give me a direction and a feel of what the general market is. And then I'll drill it into the lower time frames. Now, if I look at this, and let me just flash this back a second. There it is there, and it's stopped dead and it's pulling away. So I know this framework works, but you've got to be able to recognize this. Now, on a 5-minute chart, not so much. But that is out of the ordinary on a 15-minute. It is just poof. But also look at where it stalls out. Bang on the center line, which is the daddy from yesterday. Came up. Where is that? Look at how the price oscillates in and around these levels. Now, if I move this further to the hourly, and now we look at this particular movement, it isn't out of the ordinary. You know, it's not massively. That is huge. This isn't. So you've also got to be able to pick the right time frame to enter. So the general consensus of this particular market is down. It's got a downward motion here, running back into center ground because it's failing the tops. So I already have that in play. If I'm watching a 15-minute and then I can see an overextended shoot in the opposite direction of where I want to go, that is a great opportunity for a quick retracement. Now it can come in, let it settle down, and then continue on its motion. But because DAX moves quick and that was violent, I was only interested in the short-term trade for one reason. If I'm wrong, and that decides to keep on going up to the top, that means there's a huge amount of pressure behind it. And if it gets up to there, that's a hell of a loss. Not something I'm prepared to take. So the theory is always the same. When I'm day trading, I get in, I get out, and I'm gone. And that way I get paid, I can enjoy what's going on, and that's it. But I was going to enjoy today. But look, boys and girls.
I'll get the coffee.
It's very, very close to being empty. This is no good, because we all know Scruffy likes his coffee.
I'm going to get it.
You are going to get it.
I'm going to make the coffee.
Oh, is that what we're talking about? All right.
You are?
There you are. You have that for later, all right?
You are.
Okay, boys and girls. That's me done. I've definitely been paid well today. Do you know what? I'm going to book another holiday. I'm going away again in 3 weeks, but I think we need to start planning for September. Because I've got, well, let's see. We doing Trade Anywhere in a couple of weeks in Turkey. In June, we've got the Scruffy Meet Conference in Darlington. That's going to be a great event. It's pretty much sold out. There's only 3 seats left now. And then it's a full house again. July, I'll be in a lodge. August, I'm not sure what I'm going to be doing. September, I'm going to Caribbean. October, I'm going to Benidorm for Scruff in the Sun conference. Be out there for 9 days. November, I'm on a cruise. And I haven't quite decided what I'm going to do in December. So this life is really difficult. And the reason why I'm telling you what I'm doing in that is because these charts have paid for all of it. And if you watch the Vanguard series, you'll see exactly how it was paid. So I hope that helps. So as always, guys, do what you love and the money will follow. See you all in the next one.